Hi everyone, I'm just going to go and I'm just going to take some time out just to show you the benefits of having an understanding of candlestick formations and how they can be applied, on how they can give you so many opportunities within the current market, and just by looking at specific candlestick formations. The particular pair I'm going to use is the US dollar Swiss franc on a weekly time frame. My particular style, I like looking at weekly candlestick formations because that literally gives me an idea where I should be putting my bias for the following week. So if I'm looking to trade off a 4-hour time frame, then I'm looking for those daily candles to pretty much complement weekly sentiment, and then I can actually fine tune my entries and exits on my intraday time frame. So just going to go and show you a setup on the US dollar Swiss franc, just looking at prior support and resistance levels and prior candlestick formations. So we saw a very negative start to the year for the US dollar Swiss franc. We saw a nice bearish engulfing candle. Subsequently, since January, we failed to see February, March pretty much continuing with that negative sentiment, and we've actually seen the US dollar taking back what we saw through that negative sentiment that we saw through the start of January. So now price is pulling back to the current levels, and it's pretty much taking everything back that we saw on the negativity. However, when price reached the January high, in fact, we failed to see the weekly candle closing higher than that. Okay, so that's inevitable because people are taking buying opportunities through this period. Ideally, the level that they'll be taking their profit off would be the prior high, which is in this case the January high. So there we go. We saw a slowdown, and then because people took profit, you could see that we had a bearish engulfing candle formation. Okay, so all that selling or consolidation of those of these buying contracts led to a lot of selling contracts now being filled out, and in doing so, we saw the prior week, or last week, in fact, we saw a lot of selling sentiment coming through, and what it did was it formed a bearish candle. When I say a bearish candle, you can see this is started. The open was on the left hand side of the upside, and it closed down here. Now you'll notice that the low of last week's candle has engulfed the prior week. Okay, so this is what we call a bearish engulfing. It's engulfing the prior candle. So here, because it's bear, it's a selling candle. It is actually engulfed the prior bull candle. Okay, and this has happened at a price support and resistance level high, a major support and resistance level high. So it takes in more significance of the outcome, which means it's bearish in its nature. So therefore, if I'm looking to trade this, i.e. this week, I would have set a number of mechanical requirements. Okay, if I'm thinking this is a bearish sentiment candle, if I'm looking to trade it aggressively, then what I would need to do is set up a number of mechanical requirements. In this case, I would have drawn a horizontal line at the low of last week's candle, so the Friday close. Okay, and then I would have said, okay, great, if this is a bearish candlestick formation, then what I need is for any day this week, i.e. this Monday, this Tuesday, Wednesday, today, Thursday, Friday, this week, to close lower than last week's body close to give me a potential entry. So now if I drop down to the daily, you can see that in fact, if I just move this down, this is Friday's close. So bearish engulfing candle. This is Thursday. Wednesday, we saw a lot of negativity. Okay, so this is Friday's close. You'll see this candle over here is Sunday evening, and that's the Monday break. Okay, this is the candle I was looking for. That bearish sentiment to break last week's low to give me a valid entry short because of the weekly bearish candlestick formation, the bearish engulfing, to then trigger a potential trade to the downside. Now we can fine tune that. You can see on the actual the FX8 that the candlesticks are still blue. Everything's not against me here, so you can fine tune your entry. Okay, there we go. That would have been the entry here again. The break. This is Friday's close going into Sunday. The break on. There we go. So we'll drop down to the 1 hour. Now I can show you even better because you'll notice here between these 2 points over here, this is Sunday evening's session through there. Okay, that's Friday's close. Remember, of the week. That's the Friday bearish close. So I was looking for a Monday, Tuesday, Wednesday, Thursday candle to close lower, and that on an hourly would have been the trigger. This little bug over here, That was actually at 10 a.m. on Monday morning. You're going to ask, bearish engulfing candle closed lower than last week's low, which would have been Friday's low. And if you look at the old setup, you can see that this candle over here on a 1 hour, the only thing that was not in its favor was the actual Osama. So you would have had to wait for further confirmation, the breakout. You could have waited for the next couple hours for the bearish pullback and then a continuation. Then you have it. So you can look over here. We had a blue arrow, not good because the candlesticks are still red. Bang, we get continuation candle with the red arrow. Everything is in our favor to look short. So therefore, back towards the weekly 20 period moving average. And if I just take that level right now, which is there, let's just change it so we can actually see that on our 1 hour time frame. Oops, lost. Bear with me for a moment, guys. Let's move that. Let's make them bright pink so we can really see it. Drop down to that 1 hour again. There we go. This is this pink line down here. So that's the entry candle. Okay, let me just zoom that out. There we go. Sunday evening, Friday close, looking for a bearish breakout. We had it right here on the Monday. So at 12 o'clock on Monday, we had everything concurring, break of that price support and resistance, a pullback, a continuation. You could have entered on this candle and targeted the weekly 20 period moving average, and that was approximately 130 pips away. And if you look at everything, it's eventually reached it yesterday. In fact, roughly yesterday morning at around about 12 o'clock, we actually saw price heading into a level, and then you can see that price has done nothing since. It's actually gone sideways, but we've actually sold according to the requirements, according to a very strong candlestick formation on a weekly. So 130 pips, wouldn't have got all of it, but 100 pips certainly would have been a really good return on time invested for this particular pair. I hope that's really shown you some sort of idea of what we want as a trader.